I cannot afford to get all the best blockchains, cryptocurrencies, basically, he's saying. If I have 1,000 Cosmos and 1,000 Tezos, should I break my portfolio down so I can get some EOS, like 500 Cosmos, 500 Tezos, 500 EOS? So this is really a question about diversification and how to invest. Obviously, everybody's different. I can share with you some strategies I think, in my opinion, obviously not investment advice, are a good start. In general, when it comes to diversification, you want to have at minimum 10 different investments. You want to have 10 to 30 investments, ideally, for diversification. Now, yes, you have other people out there like Warren Buffett who don't believe in diversifying, but they're professional investors. So unless you're doing this for a full-time job, 9 to 5, investing, diversify, right? Because you won't have the time or the expertise to know what you're doing, right? Unfortunately, right? So as opposed to trying to spend 9 to 5 doing that, because I'm guessing you have other jobs, family, and things you're doing, diversify. When it comes to crypto, whatever money you've put aside for investing in crypto, don't put more than 10% of your income in investing, right? Ideally, right? So let's say you're making 100 grand a year. One thing you could do is say, you know what, I'm going to invest $10,000 each year. And let's say you're investing all that in crypto, right? Probably not the best thing, but let's say you're doing all that in crypto. I think a good approach would be, okay, I'm going to make 10 investments, $1,000 each, into 10 different cryptocurrencies. And just to keep things simple, we'll make it a equally weighted portfolio. So actually, before we even do that, let's put $1,000 aside in cash. So that way we always have some money to buy the dips when we need to. So we'll say $1,000 into a stablecoin like DAI. We lend that out via Celsius, via Compound, via BlockFi, via Nuo, and other platforms. So we spread our risk around. So maybe $250 on Celsius, on Nuo, on BlockFi, on Compound, each making you about 4 to 7% annually. So to protect against inflation. And that's what just capital you have there. That's not in cash, but it's there in case you need it to buy the dip. And there, so that leaves you $9,000 to invest in 10 projects. So that really gives you $900. So this is kind of what we sent to our customers via a newsletter, but it was just in a long form of almost 1,500 words email. But so $900 in 10 currencies. So we would just go on tokenmetrics.com, look at the top 10 long-term investments, for example, right? Because anything, when it comes to things like this, you have to think long-term. So meaning 1 year longer, ideally 3 years or longer. So look at those top 10, and I would put $900 in each. And then let's say I put $900 into BTC. Then I would get a portion of that, maybe 25%, and anywhere from 10 to 25%. And then I would lend that out as well to earn some extra interest on that, on Celsius, on maybe wrapped BTC, on a DeFi platform. So I would have my assets at work for me. So I think something like that would be ideal. That's just one way of doing it. Obviously, no strategy is perfect, all right? The ways you can evolve and adapt to it, but I think something like that would diversify you across good projects. It would give you exposure to the high cap projects like Bitcoin, Ethereum, because those projects have always been, for the most part, in our top 10 long-term ratings. Yeah, they've been in the top 10 long-term ratings, but then also gives you some exposure to some low cap projects. Right? We have 2 projects in the low cap with market caps of 90 and higher that we think are very good projects. So it will give you a good exposure to both high cap, mid cap, and low cap based on our team's fundamental analysis, technology and code reviews, and technical analysis. All those factored in. That's why we think our platform is very simple with things like this. And in case one of them dips, right? So you'd have a strategy to rebalance your portfolio. So let's say you rebalance every 1 year, every 12 months. You go through. If a project has dropped from the list on the index, you sell, and you sell that out and buy something else that's joined the top 10. Or if a project or is still in the top 10, but the allocation is shifted, then maybe, so let's say that you had 10% of the 9,000 in Zcash, for example, and Zcash is now worth 15% because it's gone up. Using portfolio theory, you would sell that 5% to bring it down from 15% to 10%. So basically, it forces you to take profits when times are good, bull markets, and then buy. Let's say some other project is still in the top 10. Let's say a project like Ethereum is down, the allocation is down from 10% to 5%. So you take that 5% you've sold from Zcash, buy the dip on Ethereum because it's still a highly rated project, but it's down. So it forces you to buy the dips. It forces you to sell to optimists and buy from pessimists, as we mentioned earlier in the show. So a strategy like that, in my opinion, would be the ideal way to go, or rather the ideal way to start. And then obviously do your own research, find other strategies as well based on your risk tolerance, your investment time horizon. I mean, so going back to this question, I think just having these three is not enough. I think you have to diversify and have even more, right? Because in this example, if you have 1,000 Cosmos, 1,000 Tezos, and that's all you have, I think you can diversify even more, right? Unless you're a professional investor, but I'm guessing if you're a professional investor, you probably would not be asking this kind of question. You probably already have your strategy kind of laid out. So with something like this, unless you have other coins and you're just talking about blockchains, EOS is not on our list long term. EOS hasn't really been up there on the list. So I would recommend you kind of go through what I've just shared. Go to tokenmetrics.com and view the top 10 and kind of use that as a way to figure out how to build the ideal diversified portfolio.